So President Trump announced that he has COVID, as well as Melania Trump. So the stock market future is down about 2% or so. What's going to happen with the market today and the following week to come? In this video, we're going to talk about 5 specific stocks that I would recommend for you guys to have on your watch list and ready to buy as the market drops, because these are high quality companies that have been growing dividends for years. They've been grew dividends in 2008, 2009 financial crisis, and they're still paying dividends and increase the dividend in 2020 with all the things that's going on. So these 5 companies are gonna help grow your portfolio. So you see here, Donald Trump announced tonight, First Lady of the United States and I tested positive for COVID-19. We will begin our quarantine and recovery process immediately. We will get through this together. So because of this tweet, the stock market future, as you can see here, is down tremendously, 1.3% for the S&P, NASDAQ down almost 2%, the Dow at 1.3%. You can see some of the other stocks are down as well here. But overall, the stock market looks to be down big today. And I'm going to provide you with the 5 companies that are going to be great for your portfolio and for the long term and continue paying dividends. So let's get into it. So here's the first high quality stock that you may be interested in the next few weeks as the market looks to be going down because of the situation with Donald Trump and Melania Trump with the COVID. As you can see here, Johnson & Johnson here is my first choice. This was yesterday's closing price. You can see here the company's earnings has been outstanding. Continuous earnings growth. This year it is expected to be down 9%, but recovering very nicely at 15% and 10% for 2021 and 2022 for analyst expectation. S&P credit rating AAA. Low debt to cap ratio, a decent 5.48% earnings yield. Again, this is based on yesterday's closing price. So the next, today's market looks like it's going to be down. Monday is probably going to be down as well. So I think the next week or so, the market is going to be down because of what's going on with Trump and Melania. So this is why I think Johnson & Johnson, right now the company looks fairly valued, but if it's to drop down to 140, 135, 130, that's a great buying opportunity for a long-term position in Johnson & Johnson. So let's look at the next company here. AbbVie is the next company that I would look at if in the next week or so that the market is going to head down. This is another company. If it goes lower, definitely buy. Definitely now is actually a good buying opportunity. But if it goes down to $80, $75. Great buying opportunity with AbbVie. High dividend yield at 5.42 as yesterday's closing price. Currently earnings yield of 11.5. BBB plus credit rating. The debt is concerning, but overall, as you can see here, earnings growth 2020 is expected to be 17% over 2019, and then 17% in 2021 and 12% in 2022. So this company has a long runway to get higher as the years goes. But with the situation with Donald Trump, it looks like this price is going to be much better at 80 compared to 87. It'll be maybe $80, $75. Great buying opportunity. It's a good buying opportunity now. So if it drops even lower, great buying opportunity. As you can see here, earnings has been growing very nicely through the past 4 years, 3 years, and expected to grow very nicely for the next 2 years. So AbbVie is my second stock to keep in your watch list here. The third stock here, Enterprise Financial, ticker symbol AMP. As you can see here, it's a low PE, adjusted blending yield of 10.49, a nice dividend at 2.68. You can see here's a financial company, and they did not cut the dividend in 2008, 2009. You see that they increased it. Earnings has been erratic, but in the definitely uptrend. You can see here earnings are expected to be 11% in 2021 and 11% in 2022. And that's after a huge increase in 2017 and 2018. You can see here the company looks to be undervalued based on his historic normal multiple of 13. You can see you have great high potential annual rate of return, about 30%. S&P credit rating A, decent 39% long-term debt to cap ratio. Again, this company looks like a good buy at this price. But if it goes down to 150, 145, 140, definitely even better buying opportunity, as that will increase your dividend yield and your earnings yield potential. So this company is definitely another company to have in your watch list and ready to pounce on if the market drops considerably in the next Friday, today, Monday, Tuesday, Wednesday. So this is another good company to have in your watch list and be prepared to buy. The fourth company here, Lockheed Martin, outstanding company, credit rating A minus. The debt is pretty high, 74%, but they're very manageable. As you can see here, earnings has been growing very nicely throughout the years. It's been flat or very low growth in 2008, 2009, coming off the financial crisis. But as you can see here, recently, 2018, 32% growth, 25% growth in 2019, 10% growth in 2020, even with all the things that's going on, 11% growth, 8% growth for the foreseeable future. Overall, the company looks fairly valued currently. So if you could get this company at a $370, $365, $360, great buying opportunity. It has a low PE versus its normal PE. The adjusted earnings is decent at 6.2, but if the market is going to drop for the next few days, Friday, today, and Monday, Tuesday, this earning yield would increase, the dividend yield would increase, and they just announced a dividend increase recently, sometime this year. So that's very positive. I think it was like this month. So that's Lockheed Martin. Keep this in your watch list. A minus credit rating, outstanding company. I personally own it, and if it drops any further, I'm buying more as well. As you can see here, $380 was yesterday's closing price. So if it goes to 370, 360, 365, great buying opportunity, because that'll give you about a PE of 15 here at 362. So that's very undervalued based on its normal multiple. And the last company to keep in your watch list is T. Rowe Price Group, outstanding financial company, ticker symbol TROW. As you can see here, earnings yield of 6.7, currently has a P of 14.8 with a normal multiple of 20, very undervalued versus its historic multiple. As you can see here, very short or very low long-term debt to cap ratio, outstanding balance sheet. This company has a decent dividend yield of 2.81. If we shorten this time period, you can see here earnings been growing very nicely. And let's go back here. Actually, you can see here they did not cut the dividends in the financial crisis in 2008, even though it was a financial stocks. That just shows you the strength of this company. And they haven't cut the dividends or decreased it either during this year period. As you can see here, earnings is expected to be down -1%, but picking up at 10% in 2021 and 7% in 2022. It looks to be fairly valued right now. You still have a decent 10.6% total return, annual rate of return. But if the market is going to drop, you can see here it went as down as $97, and it's not a decent $10 decrease to $118, $110. Great buying opportunity here with T. Rowe Price Group. I highly recommend it. I personally own it. You can see here I bought shares here and I'm up very nicely. So if it drops again, around here, $115, anything $120 is a great buying opportunity. And if it goes lower, keep buying. This is a solid company with a great balance sheet. As you can see here, only 2% long-term debt to cap ratio, decent earning yield, and a dividend yield of 2.81. Very nice yield. So those are my 5 companies to have on your watch list as the market looks to be dropping today and possibly Monday, Tuesday, Wednesday. Who knows, depending on the recovery of the president. So these are 5 companies definitely worth having on your watch list, ready to buy at any moment.